This video continues to deal with depreciation. On your screen, you see the general journal of a company we had last week. The Delphus Ice Rink purchased a couple large assets, and you had to determine the annual depreciation rate and enter a couple entries in the journal and the ledger. We're going to take that a bit further today, and we're going to look at what happens at the end of the life cycle of an asset and look at what happens when we sell or trade in an asset. We're going to look at one of the two that we looked at last week, the Zamboni. This is an ice resurfacing machine. On the right, you see that on January 1, 2020, Delphus Ice Rink bought a new Zamboni. And the purchase was for $23,000, and we determined that the ice resurfacing machine would have a useful life of 12 years. And we assumed at the end of those 12 years there would be some trade-in value, and we made an educated guess that that value would be $500. So the annual depreciation rate is $1,875. We take the cost of $23,000, subtract the salvage value, the trade-in value, and then divide by 12, and we get $1,875. This company, remember, has an annual accounting period, so that's important. Now, we're going to assume that it's 12 years later. We said this Zamboni had a life expectancy of 12 years, and is now 12 years later. And we will assume that you not only have graduated from high school, you've graduated from college, and you have been hired as the accountant for the Delphus Ice Rink. So you need to deal with this situation now that we have a Zamboni that's worn out. So we will assume that the business is going to be selling this Zamboni for the $500 that we assume that it would have as a trade-in value after 12 years. So indeed, we are selling it for $500. We're making it relatively simple here. So on December 31st, in the year 2031, this is 12 years in the future, you need to make the proper entry into the general journal at the left and then post to the ledger. So that's our task. But I want to look at a couple things before we do that. Let's look at the ledger. Let's go to this page in the ledger. There's some assets. We haven't listed all of them, obviously, but we listed three that we will be using. Obviously, the cash account. You see there's a balance in the cash account, and that's not particularly important at this point, but we will be using this account. The Zamboni account is important for you to understand. We used this account one time, way back on January 1st, 2020, when we made this initial purchase of $23,000. We haven't touched it since that time, so it's now 12 years later. So that account remains the same. But the one right below, the contra account, would look like this. Once again, the Delphus Ice Rink has an accounting period of 1 year. So at the end of each year, we would make this entry. We would debit, if you remember how we did this in problem 9 last week, we would debit depreciation expense for the Zamboni, and then we would credit this account, accumulated depreciation. So we did that on December 31st, 2020, and our annual rate that we figured was $1,875, so that account is credited. So that accumulates from year to year to year. At the end of 2021, we would have done the same thing. Debit to the depreciation expense account. You don't see that here, but that would have been the debit, and the credit goes to this account. Once again, the annual rate stays the same. We are using what we call straight line depreciation. So at the end of 2022, 23, 24, and so on, all the way up to the present day, we will assume that this is the end of the year, December 31st, 2031. And again, we made that same entry, credited the contra account for $1,875. So you see the balance in this account is $22,500. And if you subtract that from the initial cost of the Zamboni, we have a value, a net value at this point of $500. Okay, we're going to assume that we're selling this for 500, and we'll show how that is recorded. One more thing I want to show you. We have a couple accounts in the revenue, and this isn't important in this video, but it will come into play because you have a couple questions at the end of this video. And as a hint, I'll tell you these accounts are critical ones. There's an account that we've had many, many times, sales revenue, but there's a new account called other revenue. I didn't spell that correctly, but bear with me here. There is an account called other revenue, and we'll explain that in just a moment. So let's go back to our general journal and take a look at the entry we need to make. So this is 2031. We are selling the Zamboni for $500. So obviously we need the date. So it's 12/31/31. That's our present day. And we are going to debit cash. We got cash for this. And we sold this Zamboni for $500. So obviously $500 should be debited to cash. Cash is an asset. It went up. So that part is very simple. Now, the second part, the credit, is a little bit more difficult. There are more than one account involved here. One credit and another debit, actually, we'll see. This is not a sale, so we don't credit sales. Typically, in the past, we've many times debited cash and credit to sales, or perhaps debited accounts receivable and credit to sales. But this is not a sale. The Delphos Ice Rink is not in business to sell Zambonis, so we can't consider this to be a sale. So that will be important, as we will see. So first of all, let's take a look at the credit involved here. And we are selling the Zamboni, this ice resurfacing machine. And we are selling it for $500. But the credit now needs to be $23,000. And let me explain this credit. What we are doing is closing this account. Sometimes accountants say it's clearing an account. We no longer have this Zamboni. So in the ledger, we have this account that we've had since 2020, showing a debit balance of $23,000. We want to close that account. We want that account to be zero because we no longer own the Zamboni. So we need a credit in the journal to the Zamboni account. Then we have another debit that we will be using. Accumulated depreciation for the Zamboni. So this has to be debited by $22,500. Whoops, we didn't do that right, did we? Excuse me. $22,500. And the reason is we want to do the same thing. In our accumulated depreciation account for the Zamboni, we want to close this account. There's no need to further do any depreciation on the Zamboni because we no longer have it. So not only do we want to close the Zamboni account 104, we also want to close its contra account 104.5, the accumulated depreciation account. To do that, we look at the balance. It's got a credit balance of $22,500, so we need to debit in our general journal by that amount. So let's do posting. You've done this many times, should be easy. And we got some cash. And this was journal page 12, I believe. And we gained $500. So that part's very simple. And our typical account number is 101 for cash. Zamboni now is credited by $23,000, as we said. So the date now and the journal page and the credit of $23,000. So obviously now this has been closed. That account has been cleared. It is no longer on the books. We no longer have that Zamboni. So the account is 104 back into our journal. Then the accumulated depreciation account for the Zamboni is debited by $22,500. So on this date, and then again, journal page 12, it's debited by $22,500. Oops, excuse me, not credited. I should have a debit. And as we said, that will close that account. And the account number, 104.5. So this has been a very simple example of how to record this entry. We made it very simple because we sold this Zamboni for the trade-in value or the salvage value that we expected 12 years ago, and we waited till the very end of the 12 years to make this sale, so it was relatively simple. In the real world, you may trade this Zamboni in at any time, obviously. Maybe you decide after 10 years we want to get rid of it and get a new one. Maybe after 5 years you want to do that. So the accumulated depreciation would obviously be different, which means that hopefully the Zamboni is worth more money after 5 or 10 years than it is after 12 years. So those things can change, and that will give you some idea of what you might be getting into when you go to the questions at the end of this video. So at this time, go back to your course page and answer the question after this video.